Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. We talk a lot about undervalued sectors and what potential investments are out there based off of ratios, which is an asset priced against another asset compared to history to see what assets are cheap. Today I'm going to go over an overall market update just to look at the broad overall market to see what the market is doing. So this is technical analysis. We're doing an overall market update. I'm going to use ETFs to gauge what the market looks like. So we're going to go over yields, what the dollar's doing, bonds, NASDAQ, and Dow. And then we're going to go into ETF commodity specifics for each sector that I like to look at. So we're looking at the 10-year U.S. Treasury yield. Remember, this is a yield, not a price of an asset. It is a yield. It's a percent. It's an interest rate. And interest rates are continuing to climb. I don't know if this is just inflation that people are worried about or if it's the actual solvency of the government. Not 100% sure which one it is. In history, it's been of inflation. So, and to be honest, I don't even know what we'll call it a run on a complete selling of bonds would spike interest rates. So I think this is just normal inflation that we're seeing and people are selling bonds. If we were to see a spook, if the market was spooked, you would see a massive interest rate move very quickly. We're not seeing that, so I think it's just inflation expectations are higher amongst bondholders, and bondholders are selling their bonds. For the dollar, we've got the US dollar index here, we'll call it the Dixie. It's up a little bit, but we can see it's forming this pattern right here. We'll see how this thing plays out, if it resolves to the downside or the upside. This is a very large pattern here. So what I'm seeing is I think it's going to resolve downward given that yields are increasing and given that inflation from real estate is probably going to create this soup of inflation. But again, we've never shut down an economy for 2 months straight, and I know that caused a lot of problems. So we'll have to see which way this resolves. This is TLT, a 20-plus year Treasury bond ETF. It is getting hammered. As rates or yields go up, the price of bonds go down. It means that people are selling bonds and that interest rates or yields are going to go up. You can see dark cloud cover here and a bearish engulfing. This thing is at the moment heading lower, and it looks like it's going to continue that momentum to the downside. So it does not look good for bonds. For the NASDAQ composite, it definitely doesn't like higher interest rates. Interest rates have been going up. On the 10-year, like I showed a couple of slides ago, we can see this thing starting to roll over, and it's still coming under pressure. We've got 2 large down days with 2 kind of small up days. I think this is going to continue to the downside possibly. So I would look for a downward move in the NASDAQ if yields continue to move up. If you looked at the yields here, this is a bearish or bullish engulfing here, which means yields are wanting to go higher. So I think path of least resistance is up for yields, down for NASDAQ. The Dow Jones, it's still hanging in there. We do have a contraction in the candlestick here, which means the opening and closing price is contracting up. So we've got this kind of bull move right here. We've got a wick on the bottom hammer and a bullish engulfing. It's shot higher and we're contracting here. Is this thing going to roll over, or is it going to power through this area to the upside? We'll have to watch and see what the heck this thing does. This is the North Shore Global Uranium Mining Index. So we're getting into the commodity-specific ETFs. Just looking from a picture here, we've got a large move up, a smaller move up, and then a smaller move up, which is a contraction. And whenever you're contracting in terms of momentum, velocity, however you want to look at it, that usually means that you're at a turning point. This could turn lower here. We do have a dark cloud cover. The saving grace here is we do have a wick on the bottom, which means it could have some momentum going to the upside. So if yields continue to go up and the overall market kind of rolls over, I expect this to follow suit. If the Dow finds some strength, if we start to see some people buy up these sectors, there is still the possibility that this thing could push higher. So there's a lot of things pushing and pulling on all of these sectors in the short term. It's not like you can see one direction up, one direction down. Some of them have a large influence over these sectors. So what I see is potential downside because of this larger contraction up. And in the short term, we'll see what it does. It may pop up a little and roll over, or maybe it just sells off. But I'm looking for a sideways to down movement out of uranium based off of this chart. XLE, I would say this looks a little better. We've got a pullback, a little pull up, and then a small little pullback, and that usually resolves to the upward because we've got a lot of momentum, and I think it's going to resolve upward looking at this chart. I'm just looking to see if there's any momentum back here. I don't really see much. I don't see any patterns. I don't see a contraction in candlesticks and whatnot. So I think it looks okay to move sideways or up. Global copper miners, Global X copper miners. We do have a contraction on this one, just like the uranium one. Kind of this big move up, a smaller move up, and then the sellers are starting to win out, and even a smaller move up. So this could stair step kind of lower. This could be a shoulder, a head, and then putting out another shoulder here while it comes down. So I'm looking for sideways, like maybe a very short-term upward move, and then a rollback over potentially. So that's kind of what I'm seeing on a short-term basis. Long-term, medium-term, these charts I think are going to do fantastic. Now GDX, this one actually looks not as bad. We're coming through this downtrend. Yeah, we're still in this downtrend move. We've got some larger up-day candlesticks where the opening and closing price is quite large, which means we have some momentum to the upside. We had a small little sell-off, another big up day with a small down day next to it. This could still push to the upside through and take a run at this downtrend line. So it's still mustering up some resemblance of bullishness. It still is. But if it doesn't break this downtrend line here at this next attempt, we're going to still be in this downtrend. SILJ, we're looking okay. It's not too bad. We got a wick on the bottom here. Wick on the bottom. There's some buyers down here. Seems like every time it wants to go into this area, it gets bought back up and pushed back higher. So we'll see what happens over the next couple of days. We do have some downward momentum here. These big, large down days with the small up days here. And we'll see if this is a reversal point with the contraction down and then a reversal up. So we'll see this week. EEM, emerging markets, looks kind of shoulder, head, shoulder-ish. And maybe we can turn this thing around. We do have a lot of volume on these up days here. Maybe this is the bottom of this, we'll call it shoulder, head, shoulder pattern. It could extend down here a little bit more if the overall market sells off. So I'm always looking at emerging markets. I own emerging markets in my 401k. So overall, I'd expect some of these, like uranium, I still expect a pullback here. If we're going to get it, we'll see. I am a long-term holder. I do not trade these things. I don't trade in and out. I don't trade any of these. I buy them when they're cheap, and they're cheap right now, and I just hold on. I do this analysis for entertainment, for financial education, and if you guys want to trade, I mean, that's up to you. I'm an okay trader at best. I'm not the best of. I don't claim to be the best at trading. So I usually take long-term positions and invest in companies when the valuations are cheap, and I just hold on till the end. The end being a high ratio, and market conditions change. If you guys like this type of analysis, subscribe to the channel. Give me a thumbs up. Leave comments below if you guys agree or disagree with anything I said in this presentation, and I appreciate you guys listening. Thank you. This is Finding Value.